Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Wednesday, July the 11th, 2012. Well, continuation of the trend to the upside today, and the candle that we're examining is the second last candle here. This final candle with a large back body is still developing and is not complete yet, so we can't analyze that candle fully at the moment. But the current candle that has finished developing is a large white body, continuation of the trend to the upside that was established for the previous day's trading on a spinning top type candle, where we saw strong price rejection from the 102.18 level. Today we saw a large white body and the market take out that area in a very bullish way. The market has closed up above the midpoint level, didn't close up towards the high however, so we did see the buyers take control of this market, but they did lose some commitment up around roughly around this 103 level that coincides with the zone of resistance that extends just below the 103 level and to just beyond. And we can see when the market tested up to that level previously that there were a lot of spinning top type candles that did lead to this change of trend to the downside. Today, as this candle is developing, we have quite some bearishness in this market, a large black body candle, but as I've said, the market hasn't changed trend yet. We are still trending up technically. The market has a higher high and a higher low, and we have a bullish candle. Now, in terms of the previous Fibonacci extension, and what we were looking at previously was the downtrend that the market was in and the relationship of that in terms of Fibonacci ratios to the prior time the market was trending down, and we saw the market finding support at the 61.8% level, and that did lead to that change of trend. Also looking at that Fibonacci retracement, and if you recall, we were examining the market finding support around the 38.2% level at 101.90, and we saw strong buying coming in, and the market did end up having that change of trend with a candle that made a higher high and a higher low. But now looking at the Fibonacci extension of the current first time frame uptrend and the relationship of that to the prior time the market was trending up, we have seen the market rejected from the 38.2% level, and obviously that is having its effect. We didn't trade exactly to there and roughly in a zone that coincides roughly with around the 103 level, and we've seen this price rejection, and what we're seeing today is the result of that price rejection and quite some bearishness in the market as the current trading day is developing, and does set the market up for a potential change of trend. Also looking at the Fibonacci retracement of the prior downtrend, and here we see rejection from the 50% level. The market closed above the 38.2 but tested to above the the market closed above the 50% level and tested to above the 61.8% level but was rejected from there. So obviously the Fibonacci retracement level at 61.8% is having its effect, and today we're seeing the sellers come into the market. In terms of Ichimoku, we have a bullish market in the long term and the medium term time frame, by the market trading up above the cloud and the Kijun-sen, which is the pink line, and for the day's trading that has just completed, the market remained trading above the Tenkan-sen, the green line, which meant that we were bullish in the short term time frame as well. We had the market break out in a very strongly bullish way above the cloud and the Tenkan-sen, and then we saw the Tenkan-sen holding as support for this market for the previous three candles. At the moment, the way that this current candle is developing, we are trading below the Tenkan-sen and in a bearish way, and if the market remains in trading in that manner, then that could be very significant and does suggest that there is strong potential for a change of trend back to the downside. We could easily see the market trading down to the 101.44 level, which is a very strong support level, and then we have some support down around the top of the cloud around the 100.07 level, which coincides with where the Kijun-sen is trading at the moment. In terms of the ticker span, that's above the corresponding price action, so it's supporting the bullishness that we're seeing in the higher time frames, but not in the faster time frame. So basically the market's bullish in the longer time frames, we are seeing some bearishness and a strong potential for the sellers to take control of this market and test to the 101.44 level. I suggest that that is an area that's crucial to this market for the next few days trading. If we see buyers come back in and we trade up above the 102.18 level, then we could see the market trade up to 103 and test above there again. But a strong close down below the 101.44 level could quickly see the market trading down to around the 100.07 level.